Welcome back. And my special guest host once again is Julie. How are you, Julie?
Fine. Good morning, Seewing. How are you?
Morning. Fine. Thank you very much. And today we're going to talk more broadly around the housing market, around housing news and from a high level for everybody. So without further ado, let me share my screen. And I'm using the article from Housing Wire. And the main feature housing data analyst is Mr. Logan Marashani. I butcher his last name, but Logan from Housing Wire. He's he,
Right.
he's famous. I follow his data. I follow his videos quite
hmm
often on a weekly basis. He reports some great historical data about the mortgage rates around housing economics and what have you. I really respect this man, Logan Marashami. Anyway, the headline is The Great Stay: Why Homeowners Staying Put. So the excerpts from this article by Logan by Housing Wire is that he says about a year ago, I started noticing a parallel between the housing market and the labor market. So people don't understand, Julie, the mortgage rate are not based on the rate cut by Jerome and the Federal Reserve. In fact, there's a 50 basis point rate cut occurred several months ago, and yet the following day, the mortgage rate went even higher.
Oh my
So
goodness. Oh wow. I didn't know that. I didn't think I realized that.
I'm gonna slowly again try to educate and inform our video members to continue to watch our information. So here it is, and I will explain why momentarily. It's a relationship between the housing market and the labor market. The labor market, the job market. You look at these two correlated metrics, and you will know how the mortgage rate will eventually happen. So
Mhm.
further, the unemployment in the country is very low right now, which is good.
Yes.
Everyone has a job. The conventional wisdom for almost 3 years now has been that the job market must be weakened, unemployment must be rising for mortgage rates to come down.
Okay.
Yeah. So for the past 3 years, unemployment has stayed low. So
Right.
the last few weeks, as we speak right now, we are moving to October. So the
Mhm.
most recent data usually is lagging indicator. Housing Wire usually report September data, maybe a few weeks behind. Nevertheless, the inventory nationwide has declined. Overall inventory of unsold single-family homes in the market have declined this week to 732,000 homes. That's down 0.25% from last week.
Mhm.
So there are now 34% more homes on the market than a year ago. Now, so whenever you and I, or any other housing experts that are doing the videos, whenever we provide certain data, we have to ask ourselves, people out there watching us have to ask themselves, compare to what, right?
Mhm.
If you compare this year to a historical long-term data, 30 years data, that's a very good objective analysis. If you
I
compare
see. Right.
today's data for a month ago, or even 6 months ago, even a year ago, is very is very narrow source of data. It's not gonna move the needle. Whatever data you're watching, whoever presenting, whether you and I or other YouTubers out there, you have to take it into context. You have to take into
Correct.
consideration what are we comparing it to, and how it's gonna move the needle one way or the other in terms of
Mhm.
various housing data. So with that said, this year to date, all the way until October 2024, there are currently 732,000 homes, single family homes for sale, which is around 30% more year over year higher than 2023. People doesn't know the year 2023 has been one of the lowest housing transaction ever in history. So there is a housing sales crash the last few years. Make a distinction. A housing sales crash are different than a housing price crash.
I understand what you're saying. Just less houses being sold.
Yeah, there's really no correlation. Housing sales transaction crash, the lowest ever in the past 30 years last year, and yet housing prices still continue to go up.
That makes sense. Okay.
Because, well, we will tell you some of the reasons why during this short video. We only have like 10 minutes to complete our presentation. Inventory has increased dramatically at 30% level at currently 2024 from 2023. And yet, if you compare to 2021 and 2022, at the peak of the pandemic, we have the lowest inventory levels in the history of America. So you're comparing those kind of data. And yet, people are saying people overreact to this higher than normal inventory. Oh, too much inventory. We have a stressful situation, or homes are not selling. So therefore, housing prices will crash. No, that's not the way it works, okay? You have to dive deeper into the housing metrics, economics. And anyway, so even though 30% higher inventory from 2024 from 2023, it is still below the pre-pandemic level of anywhere from 800,000 single-family homes to 1 million back in 2017 and 2019. So, Julie, what does it tell you? What does it tell you about let's look at the economics 101. Let's look at the demand and supply equilibrium.
Yeah.
From the data I just shared with you, what is the supply demand dynamics? What are your thoughts so far?
I think you can see the increasing in supply, but I think it still creates an opportunity for people out there. The housing market is not crashing, even though there's less inventory. The prices actually are still rising from everything that I can see. So it's not destroying the market, or it's not like the market's not crashing, I think, to use the phrase that a lot of people use. Yeah. It's still very viable. It's a very viable, fruitful market, even right now, with less inventory.
Yeah, exactly. Because economics 101 is a sixth grade math. A lot of you went through high school. I assume you should have been taught a high school economic class that when demand exceeds supply, then upward pressure on home prices.
Absolutely.
We're still having more demand than supply because of the title of this article we're presenting, stay put. That means owners of homes, they're staying put. They're locked in a historical low rate. Low mortgage people have all over the country is an asset.
Right.
I say it again. People need to understand the historical low mortgage. People are locked in a home, 4%, 3%, whatever, is an asset. People are not going to sell their home and get rid of their 3% mortgage to trade up to another home, paying 6.5%, doubling their mortgage payments.
Exactly.
So mortgage holders, sellers, the resellers out there, they're not going to sell their homes if the mortgage rate is still too high. If the mortgage rate comes below 6% in next year, then maybe you have a small percentage of sellers. They might want to sell for life situations. Do you agree?
Correct. No, I do. I agree with you 100%. That makes a lot of sense.
Yeah. Again, even though we have increased inventory in 2024 from 2023, it is still below the pre-pandemic level. It's still 30% below the normal of 1 million homes nationwide, single-family homes. All right, so let's finish up this. If someone needs lower inventory as a result of what's happened in Florida with the hurricane, when you have a hurricane, that they put the local market in Florida at a standstill. So for obvious reasons, right? That's part of the reason why we will have lower inventory for the rest of this year, for that matter. Right now, it's seasonality. The fourth quarter of every year, we have less activities because people are not moving toward the end of the year. Their kids are situated in a school district. People don't, on a historical basis, toward the end of the year, we don't have that many.
Right.
So until spring of every year, the spring of 2025, if the mortgage rate going to come down at the low 6%, maybe the high 5%, maybe, then you and I will agree that there will be a floodgate that will be a
Right.
floodgate.
Absolutely.
More buyers going to get off the sidelines. It's going to heat up. It can create more competition. Housing prices will go higher because still a lot of people still not willing to sell. So lack of inventory and
Right.
pent up demand. The beginning of 2025, I believe, will push the housing market again. So you and I have been telling our investors right now toward the end of the year is the
Right.
best buying opportunity.
It really is. Yeah. It really is. Contrarian mindset.
Yeah, we talked about that already. So many videos that we have done recently.
Absolutely.
Yeah, let's conclude with this. Let me see what else I can highlight from this article. Weekly new listings is pretty low, 63,000 new listings for the month of October, September. So the data showing, again, seasonality toward the end of the year, how less transactions, lower home prices. Home sales are 8% this year, 2024, above last year. Things are getting to be in a healthier, balanced market. Home prices down. I don't know. Home prices have generally not declined, even as sales has been weak for the
Right.
2 full years. You and I talk about this, right? We just
Right.
but they move up as soon as the demand pick up, even a tiny bit, right?
Right.
When I talked about this recently, mortgage rate tick up even a half basis point, 50% basis point
Right.
from today's. I know the mortgage rate already around 6.63% already right now per the Mortgage News Daily, but the mortgage rate has creeped up the last month.
Right.
The low 6.1% earlier last month. Yeah, people are just not pulling the trigger. Even with a lower mortgage rate, buyers are staying put, at least temporarily.
Right. Yeah, absolutely.
So let me quickly finish up the rest of this article. Again, it is important to point out that even in those markets where inventory is building, with more inventory than usual, which is in Florida and Texas, in certain parts, we
Right.
still have not observed home prices falling. Okay. Yep. Home prices are very stabilized, even in a market where there's more inventory than usual, which is in South and Southeast. They built relative to demand at least the past year. But still, home prices have not decreased. For the most part, there are different neighborhoods that are a little bit different. There's a new terminology as put up by Housing Wire for this particular article. Home prices also have a condition called downside.
I've not heard that before.
Unlike some of these new terms, which is the great state downside stickiness because the sellers are still not selling.
Okay.
Mortgage rate have not decreased enough for them to put their houses for sale.
Right.
If any seller right now, they're putting their house for sale, if they don't get the price that they want, they're gonna put their house, take their house off the market. Okay, there are no stress out there. There's no stress sellers. People sitting on historical low rate, they're not gonna budge until the mortgage rate goes below 6%. Again, homeowners have cheap financing. Homeowners have an upper hand.
Right. I see.
Still, U.S. sellers market, we are still at around 4%, 4 months of a supply of inventory, which is in the cusp of the buyer's market, right at that balanced market area, at least right now. But who knows? Early next year, that may different. That may change to back to a seller's market because the demand will exceed supply, creep lower. So that's my estimation. My takeaway is, again, the lock-in effect is continuing for the rest of this year. It's going to be a frozen market nationwide as a whole. I know local markets, every market is different, right? Every local market is different. You and I know that. Yeah, it's a frozen market right now. So it's not good, it's not bad. It's somewhat of a healthy market, balanced market, a little bit of a buyer's market, especially for investors. You and I are investors. There are always opportunities out there.
Absolutely. 100%.
Homeowners, I understand, it's an emotional purchase. There's homeowners, buyers out there, but as investors, you are making a business decision. You look at the numbers, and you look at the returns of investment, and you look at the best market to buy, which that's what you and I do. So,
Right.
tell investors right now is the best time to buy because right now we have less competition.
That's true.
And you can, as an investor buyer, you have more negotiation power. You get the best deals right now, best incentives. the whole 9 yards, right?
That's a really good point. Yeah. So even though the market will generally slow down at the end of the year, it really is the best time to buy for an investor. One of the best times to buy, I would say.
I agree. I agree. Okay. Yeah, that's all I have to say. Again, my summary is that if you receive any value whatsoever from this video, so like and subscribe to my YouTube channel, and also comment below what do you think about all of this. Just comment below. I'll be more than happy to answer your comments. And also subscribe to my email from my website. Scroll down to the body of the description, put your email on there so you can become a free member of our real estate investment network. So you will get free information every morning into your email inbox so you can learn more about real estate investing, the housing market, and, the economy, the whole 9 yards. Thank you so much for watching. Thank you, Julie.
For having me. Good information today. Really good information.
Yep. Thank you very much. We'll continue to have some great content. So I really enjoying putting this video out there. And thank you for your time, Julie, to provide your perspective as an investor of our network. You have done very well for yourself, and I really appreciate your input. Thank you so much, Julie.
Thank you. You have a great day.
You too. I'll see everyone next time very soon on another video. Thank you so much. Have a nice day, everyone. Bye-bye.
Bye-bye.